Hello, hello. Yeah, we see you. Welcome to another episode of ESSAC Knowledge Sharing Series. Yeah, I can see you from streaming in from LinkedIn, streaming in from YouTube and X as well. Karibuni sana. Just going to give it a few minutes as we wait for guys to join in. Yes, karibuni sana, karibuni sana. It's another one of Banga Energy Sector episodes. If you're not watching this, I'm not sure what you're watching. Karibuni sana. Yes, remember we are live on ESSAC, Electricity Sector Association of Kenya. On LinkedIn, we are live on ESSAC Kenya on Twitter, and we're also live on ESSAC Kenya on YouTube. Welcome, welcome. All right. Today we are joined by a panel of experts. Not to, they're going to introduce themselves in a bit, but we are delighted to have Edwin Faru from Bowmans. We are delighted to have Raymond Sewe from the regulator, Brian Misheni from Kenya Power, and Kobia Dennis from Ketraco, Kaluki Chalo from Brisk Renewables, and our very own CEO, George Aluru. Karibuni sana, karibuni sana. Our series today, as you have seen in the circulating messaging or posters, we are tackling the recently gazetted regulation. They're touching on the electricity markets, and we are delighted to get into this with you guys. So I will not talk much. We have a lot to discuss here. They have a lot to say, and we also understand that you have a lot of questions that you want answered, a lot of clarification. And so remember to type in your questions. If you want a specific person to direct the question to a specific person, mention it in the comment section. We'll be sure to tackle all your questions at the end of this stream. Remember, we are live on LinkedIn, we are live on X, and we're also live on YouTube. Karibuni sana. I'd like to now hand this session over to our moderator for the evening, none other than George Aluru. Karibu sana.
Asante sana, Penina. Ladies and gentlemen, welcome to today's KSS session. As the Electricity Sector Association of Kenya, we continue to bring to you the most relevant topics within the electricity sector. And I think there's nothing more relevant today than these regulations that we've now seen enacted. We have been following them up, I guess, for the last maybe 2 years. And finally, we did have the gazettement of the energy electricity markets, bulk supply and open access regulations, which really they bring to us. I know most of us are more interested on the wheeling part of the regulations, but then they also have two other parts, one on the market side and the other on the bulk supply. I'll try not to explain much because right after me, we will give a chance to Raymond Sewe from the regulator to take us through what these regulations are about. As Penina has mentioned during his presentation and even throughout the whole session, please, if you have any questions, just type them out either on LinkedIn, on YouTube, on X. We will see them and we will attempt to answer all the questions and comments that we will have received from the crowd. So without further ado, we will have about 15-minute session presentation where Raymond Sewe will take us through the regulations. After that, we will then come back and do a moderated Q&A by myself, and then open also to audience questions. And depending on how many questions we are getting, we will see how to then switch the session. So I would like to now welcome Raymond to give the presentation. Maybe just tell us a bit about what you do at the regulator, then take us through the regulations. Karibu sana, Raymond.
Thank you very much, George. Thank you, ESAC, for organizing this particular knowledge sharing session. I'm very glad to be here and sort of to sensitize everybody on the recently published regulations. So my name is Raymond Sere. To all our viewers, I work for Energy and Petroleum Regulatory Authority in energy planning and economic regulation. With us today, of course, the main focus is basically to sort of sensitize and provide awareness to the general public on what exactly these regulations are about and what exactly it means going forward, not just for the supply chain, but rather for even the consumers of the electricity in the country. So with me is a very highly summarized presentation of the regulation. The regulation in itself is in 4 parts. It's available in our website at epra.go.ke, but I've managed to focus on the 3 critical components of that regulation, which is the electricity market segment, the bulk supply segment, as well as the open access, which I believe is of very much key interest to all our viewers listening in. So just to go straight to the presentation, just to give a very brief background as to why we are here. Of course, we first need to understand how our electricity structure, our electricity supply chain has been operating over the years. And for that, largely, we've been operating under what we call a single buyer model, where generators, that is the government-backed KenGen, as well as the private, the independent power producers, have been able to generate electricity and then enter into an agreement, which we call a power purchasing agreement, with only one off-taker, and that is Kenya Power. Evacuation has largely been dealt with KETRACO. This is a Kenya transmission company, which was established in 2006-2007, solely for power evacuation at transmission levels 132 kVs and above. So this has been the modus operandi for the electricity supply chain in the country since 2006. However, this particular model has faced a lot of criticism over the years. Largely among the main reason is because when we look at the generation side of it, the tariffs have largely been administratively set and not necessarily as a result of competitive market pressures. So this, among other reasons, including efficiency, operational efficiency of both system operation, led to what we call the electrical reforms that basically informed the legislative review of then Energy Act. So once these reforms were undertaken, we ended up with the Energy Act of 2019, Cap 314, which basically provided for the establishment of an electricity market in the country. So the basis of this regulation is actually formed from those legislative review and legislative reforms that have taken place, and ultimately and consequently the gazettement of the Energy Act number 1 of 2019. So within that act formed this particular regulation. From my presentation, you can see sections 131, which outrightly calls for the establishment of an electricity market, as well as the cabinet secretary providing sort of the regulations that will govern rather or structure the electricity market per se. So that is the basis in which these regulations were formed. In terms of objectives of why, of course, I earlier stated that one of the reasons why we were trying to move away from the single buyer offtake system was basically to address the issue of generation tariff price discovery. So that is one of the main objectives in which these particular regulations were developed, establishing a competitive market framework for price discovery, as well as promoting efficiency within the operations, not just market operation, but rather even the system operations at large. Thirdly, the main objective, of course, of this regulation, which is also provided in law, was basically to provide an avenue for open access, and this is into the transmission and distribution network, and it's non-discriminatory open access to the network, which currently is not happening. So this is also meant to encourage investment across the value chain, the regulations, largely because if, and I will explain later on down in the regulations, that investments will be encouraged in the sense that if we do not have available transmission or distribution capacity within our networks, then that is an opportunity that calls for investment within our network. The regulation also, based on the accountability aspect of it, it guarantees there will be a lot of reporting, there will be a lot of surveillance, there will be a lot of monitoring within our network system. So basically, it guarantees accountability and transparency within operations of our electricity supply chain. Of course, there's also the underlying objective of the fact that we needed sort of a mechanism to support, or rather enhance our regional electricity trade through our regional integration through the EAPP. Currently, the EAPP is taking shape, and we needed, of course, to set our own internal mechanisms that will sort of interlink us together with the EAPP. So going straight into the three segments of the regulations, George will advise me if the slide is moving. Thank you very much. So going through the first main segment of this regulation, of course, is the electricity market, and how the regulation has structured the electricity market. Of course, we are looking at who are the main players within that particular market. So we have the system operator, whose role shall be over and above what is defined in law per section 138. In addition to that, of course, the system operator will also be participating as a market operator functions. And this is largely because while in any market globally, in all jurisdictions, we also have the system operation functions and the market operation functions. Different jurisdictions have different approaches. There are jurisdictions that the system market operator is one entity. There are jurisdictions that the system operator and market operator are different entity. Of course, in Kenya, in law, we don't have the market operator, so we opted for the system operator, who will also be doing the market operation functions. The market also anticipates generation licensees, whose main role will basically to be supplying electrical energy based on the market contract that they would have won within the market wholesale market setup. We have transmission licensees and distribution licensees, and these ones are actually classified as network service providers. So transmission licensees, as per the law, they'll basically be building and owning and operating those respective networks, but operation will largely be through the guidance of the system operator. We'll be monitoring the entire system and matching demand and supply at different times of the day, different times of the year. And we'll also envision to see a retail supply licenses. These are very specific, distinct licenses and players within the electricity market framework. So we'll have the retail supply licensee. Currently, we have quite a number. So these retail supply licenses, their main work will be, of course, to participate in the wholesale market, where they'll be sort of buying power in bulk and then now retailing it to the various consumers at end use. And then now we have the eligible consumers. Eligible consumers, of course, are those that over and above a certain threshold are able to sort of secure their own electrical energy, either through a retailer, or they can participate directly into the wholesale market or enter into a bilateral agreement with a generator to sort of meet their own electrical supply needs. Additionally, the market, the way it's structured, we have the various categories. So one, we have the wholesale market. This is where all the generation will be traded. And then we also have the retail market segment. Now, the retail market segment will largely be for the end-use consumers, where now, because the law calls for retail choice, retail consumer choice, so the regulation is structured that in the foreseeable future, we are going to have a situation where individual consumers will be able to select their retail suppliers of choice based on, of course, among others, price, in which, of course, suits their various load. In terms of the main load, the main market segment that will be available, we have capacity market segments, and then we have the energy market segment. So for you to participate in the capacity market segment, you will only provide firm technology. So firm, basically, this is dispatchable technology at any given time or day. And for you to participate for the energy market, you can be both firm and non-firm technology. How you're going to participate in the market, it's structured either through bilateral contract. This is a direct party-to-party agreement, or a spot market, where now we'll have the day ahead or the immediate delivery trade. So you enter into a supply agreement with your retailer, with your generator, to deliver for you at a certain point in time, and that will be reflected in the forward contract, which is to be delivered at an agreed price in a future date. If I'm moving too fast, George, you can advise. So on the next critical segment of this regulation is actually the bulk supply segment. So bulk supply segment actually is basically providing an avenue, providing a mechanism where an individual, and this applies largely to eligible consumers, where it provides them with an avenue where they can basically go straight to the generator, negotiate a tariff, and provide sort of a supply agreement from generator to eligible consumer, of course, subject to meeting network service provision, because at the end of the day, they would want to will it. Now, for you to sort of qualify to get into a bulk supply agreement or a bulk supply contract, basically there are minimum thresholds, and is that at distribution, of course, you're supposed to meet a minimum threshold of 1 MVA, which is about 0.9 megawatts. At transmission, you're supposed to meet about 10 MVAs, which is roughly around 9.5, 9.8 megawatts, thereabouts, depending on conversion factors. So those are the two main criteria in which one person is needed to enter into a bulk supply sort of agreement. In terms of steps, it's pretty easy. Steps basically, once you identify yourself a generator, once you have agreed, you basically submit that agreement. The process is still the same. You submit the agreement to the regulator for approval. Of course, this now you need also to ascertain that indeed, once you have that bulk supply, the network is also able to sort of will that supply to your load center or load location. Now on to open access, which is basically the most critical and foundational of the two. Of course, globally, without open access, without non-discriminatory open access to the network at both transmission and distribution, we cannot realize market, we cannot realize bulk supply or bilateral agreements. So these regulations actually enable open access in the country, both at transmission and distribution. So again, here we're also looking at thresholds, and the thresholds are very, at distribution, the thresholds are the same as what I've described at bulk supply, and basically that is 1 MVA at minimum. At transmission, the thresholds are 10 MVA at minimum. And maybe the disclaimer here would be, this is not necessarily you hit 1 MVA once and then now you say you need an open access. Currently, Kenya Power tracks your consumption over a 3-month period, and that is how exactly this is going to happen. So once they track your consumption over a 3-month period, and then they realize that indeed you meet the minimum thresholds, you will enter into a contract for network service provision. And this contract, of course, is categorized in terms of short term, which is up to 1 year. And then you have medium term, which is 1 to 5 years. And then you have long term, which is more than 5 years. The day ahead contingency, that is largely placed for other services, including ancillary services or system restoration services or frequency regulations, because not all the time they need access, only when they're needed. So that is why now we introduced a category for day ahead or contingency. I think, George, in terms of what this means, of course, for the Kenya power sector system, the reforms, these are ongoing reforms, and as now the publication of this regulation basically entail that from a regulatory perspective, we are definitely going now to have clear oversight, structured oversight in licensing, system charges and tariffs. We're also going the aspect of mandatory disclosure of transactions, bid volumes, prices, and whatnot. It will largely now, our regulatory approach will largely now be evidence-based, and even our pricing metrics and whatnot will be evidence-based. And then, of course, the regulation also provides us with such enforceable discipline tools, where there is also the aspect of withdrawal of licenses and whatnot. And then, of course, there's also the periodic review, market review aspect of it. So this enables us even time and again, of course, the regulation, the statutory instruments has clear guidelines on when the regulations need to be reviewed. The Energy Act also provides that, the market needs to be reviewed every 5 years, and that periodic review will also enable us to continuously improve our market operational structure. In terms of what this means for network service providers, I know Brian and Dennis will talk much about it, but basically that means now the network owners at Transmission KETRAC or at Distribution Kenya Power will now have to have open access to third parties provide it. And then now from an authority perspective, again, we'll have to approve these wheeling charges, which now will mean that, KETRAC and Kenya Power will have a new ring-fenced revenue stream for their own operations. And then now the one key component, of course, for the network service provider is the issue of system losses. The regulator will approve allowable system losses, and anything over and above these system losses will have to be borne by the network owner as per the contract that they will enter with the various parties. And then most importantly, the aspect of technical studies or technical assessment. This needs to be done within 30 days. So basically operational readiness here is required and is very much encouraged from KETRACO and Kenya Power or any other licensee who will come on board in the network service provisions. For consumers, of course, eligibility has been defined, 1 MVA and 10 MVA at distribution and transmission respectively. And then, of course, for the regular consumer, there will be retail choice once this is operationalized, but there will always be one contract per meter. So you'll not be having multiple meters for multiple retailers. We'll just have a system where you have to select your own retailer and only one retailer will have access. This is purely for metering and billing purposes. And of course, in the event we fully operationalize this, there will also be now consumers need to realize now there will also be system use charges as well as billing charges on top of energy cost that they're currently paying for. For generators, I think what this means for them, George, is basically that now they can sell directly, not just to the retailers, but also if they identify eligible consumers who meet the consumption threshold, they can sell directly to them. And then they can enter into multiple bulk supply. They are not bound to sort of enter into contract with one person as long as they have determined or established that indeed they can supply that amount. They are eligible to enter into multiple contracts for them. Again, of course, there's also the need, once the market rules are set, there's also the need of submitting performance security. And this, of course, will be triggered once there's a breach of contract on either party. I know I was very fast, but I was asked and I was given 15 minutes. But in case of any question or clarification, George, I'll be glad to respond to them. Thank you so much.
Thank you. Thank you so much, Raymond, for the presentation. I think viewers, as you have noticed, the regulation is quite bulky. It's big. It has many parts. And we will share the presentation from Raymond. And as he has advised also, we really advise you to go through the actual document available on EPRA's website. For now, I want to switch to moderated questions. And I want to remind you, the audience, to continue asking questions. You're already seeing there's about 3 questions that have already come through. Just continue putting your questions on whether on LinkedIn, on YouTube, or on X. I will review them as we continue this session and direct them at the right person to respond. For now, maybe we just staying with you, Raymond. I think we have seen the regulations. You have walked us through them. Now, a lot of consumers have been wanting to be able to buy power directly from the generators for various reasons. And most of the times it's that the generation company is probably very far away from them. And therefore, everybody has been waiting for this opportunity to do some wheeling. Now that the regulations are passed, what do we need to do within, let's say, the next few months to be able to actually see a wheeling arrangement, a wheeling transaction being effected? And if I'm either the generator or the consumer, are there any additional things I need to do for me to just start wheeling?
Well, thank you very much, George. I think I would say, of course, over the next 12 months, the most critical component for me, or even at Enterprise, of course, is operationalizing open access. And this is for both the electricity market component as well as the bulk supply component. And operationalizing open access basically means putting in place the technical, commercial, and even institutional arrangements that enable transactions to sort of occur efficiently and transparently. So this include, among others, standardized agreements. I believe if you go through the regulations, you will see in the schedules, we've provided sort of provisions, minimum provisions in which will be contained in the various agreements, bulk supply, open access, as well as even ancillary services. But from a regulatory standpoint, we believe that establishing a standardized agreements is the first step we need to do, as well as, of course, establishing the network use of system charges, not just establishing them, but providing a methodology for that and approving the same. And then, of course, for our network service providers, of course, there's need to upgrade or invest in metering infrastructure, because now the metering demands will be quite high. And then, of course, putting in place, let me call them system operations protocol. This is largely for the system operator, because they'll need to come up with operational guidelines, which need to be approved by the regulator, again, within the shortest time possible. And I think within the last meeting we had, there were some timelines that were defined, which I may not clearly state as of now. But for companies that are seeking to wield power, which I know this is of the best interest, right now they must be able, individually, they must be able to satisfy rather the technical and commercial aspect of it. Technical basically means you need to have identified your own power requirements. You need to establish that this is the amount of load needed to be wheeled. And then now this can only be done through a very robust technical assessment jointly by the customer, as well as the network service owner, be it at distribution or be it at transmission level. After which now these relevant parties will get into an agreement, which will then now be submitted to the authority for approval. George?
Thank you, Raymond. I think that you say technical and commercial assessments is what really, from the consumer side, we should be looking at and doing that together with either Ketraco or Kenya Power, depending on where the wheeling is supposed to take place. Now, just shifting a bit first to Edwin. And Edwin, of course, you will also introduce yourself, what you do at Bowman's. But now that we have this arrangement, the consumer is now faced with a need to negotiate and sign with two different parties. So there's an agreement you have with the generator and another one with the network service provider. And all these things, they have to go through some kind of EPRA approval. From where you sit, what do you see as the gaps around contracting for these regulations to actually be useful and implemented by consumers?
Thank you, George. My name, as you said, is Edwin Faru. I'm a partner at Bowman's Kenya, the Projects, Energy and Infrastructure team. For those who don't know us, we are a full-service law firm with some specialist teams, which includes our Projects, Energy and Infrastructure department, as well as tax and competition. To respond to your question, I think the question you are asking is what will be the considerations in terms of bankability and investability in this kind of arrangements. I think rather than speak about specific gaps, it's important to look at it from a broader perspective. So commercial viability, at the moment, we don't have the wheeling charges, the use of system charges. That is where the success of this new proposed system will lie. If it means that we are pushed to charges which are unaffordable, I think you will see very little uptake. If the charges make commercial sense for the particular transaction, that is a key issue. So I think everyone is waiting to see what the charges will be. As Raymond says, this is one of the things that need to be clarified. We also need to see, to put this mildly, an interest and the regulator, KPLC and Ketraco, being keen to implement this proposed new electricity market, open access and wheeling. We need to see enthusiasm and leadership from that side, so that there's confidence in the market that the regulations are actually going to be implemented. Another thing which apparently, well, it's not clear at the moment from the regulations, but I'm sure there'll be a lot that will come through guidelines and directions on the operationalization of these regs is how you actually get the benefit of the electrons. If I am on the, hypothetically speaking, Isiolo side, and I'm pumping electricity onto the grid to go to my customer in Nairobi, how do I, allocate that capacity or the electrons that I'm pumping into the system to that specific customer? And on the other side, how does the customer account for those electrons? How much is provided by KPLC at the metering point, and how much has been provided by the supplier? That is from about supply perspective. The other question we have around the regulations is access to the system. You need clear access approvals to the system for your project to be bankable. Now, that will mean the projects that have those approvals are the ones that are going to receive funding and are going to go ahead. But how do you get that approval? Is it a question of the same case that South Africa experienced, where there was a lot of clogging up of the system by approvals, by people who wanted to get approvals without intending to actually implement those projects? We need fast ready rather than a fast come, fast served system. There's a question around the thresholds, which are in the regulations, and Raymond has highlighted. The sentiment is that those are a bit high, and therefore it means that a lot of people who would have benefited may be cut out. So SMEs are actually not looking at this as a good opportunity to diversify their power sources. Large consumers, for example, but who have distributed loads all over the country, people like towercos, on an aggregate basis, they have very high consumption, but in terms of load centers, their load centers are very small. I mean, there are a couple of things I could quickly run through them just in the interest of time. Curtailment is a big issue. Who takes the risk? And I think there's one question that has been flagged around that. To get access, you have to agree to rosterizing. You have to. You can be curtailed by the network service provider. Bilaterally, yes, we can agree, but then how is that accounted for? Do I get payment? And even taking the question further, for a lender who is looking at relying on the revenues from these projects, like how do they make sure that that risk has been covered? Questions around the system. Is it robust enough to allow us to implement open access and wheeling as it currently is? Questions around the system operator and its readiness to implement these regulations. Are they willing to enter into direct agreements which then allow lenders to get the security that if one off-taker fails, they can shift to another? So I guess the point is the framework is there. It's encouraging. It's a step in the right direction. Implementation is always where everything, where everything, when the rubber meets the road, it's when we know whether these projects can actually be done. So we have a framework, which is great. We are waiting for a lot of the detail and the operational guidelines to be issued for us to get confidence and see the fast transactions happen.
Thank you so much, Edwin, for that detailed assessment from from your point of view. And I think I agree with you. Yes, we now have a framework of a regulation. Of course, in the coming months, the association also kind of looking forward to. We are looking forward to work with EPRA and with others to see how best we can kind of dot all the I's and cross the T's in terms of the guidelines, thresholds, pricing, for wheeling, all these things that would be required for us actually for us to see the first transactions coming through. With that, I then want to switch a bit to the private sector, then represented by Kaluki, and this is simple. What, as the private sector, what's your opinion on these regulations? Where do you see the opportunities, the challenges with these regulations?
Thank you, Chair, and thank you, ESAC, for this opportunity to have a forum to share knowledge and get acquainted to the regulation. So my name is Kaluki from Brisk Dynamics. Regarding energy, we are in the wind value chain, currently supporting the 3 wind farms in Kenya. I'd like to pick it up from what Edwin said. In short, the framework is available, but you'll need people like Edwin once the rubber meets the road. But straight to your question, George, where are the opportunities, challenges for the private sector? For the private sector, I think it's a bit simple. They'll expect that the stated promise in the regulation is met, which was actually presented in the objectives, where they talked about ensuring that it will be competitive, it will be transparent, and it will be non-discriminatory. So if I was going to break down what the private sector would get from the 3 aspects, if you pick, for example, an IPP, an independent power producer will be looking at selling directly to an eligible consumer. And these would give them an opportunity for commercial flexibility, better revenue, certainty. And then for the commercial consumer, the eligible consumers, the ones that have been defined, they'll be looking at competitive prices, the ability to negotiate, get a bit of reliability, and ensure that at least their biggest constraint, which has been competitiveness, is taken care of. Other than that, we expect that we'll have new entrants in the sector, people who have finally seen an opportunity and they want to be here. And I think for them, they'll be looking at fairness, a level playing field, because there's a regulation framework to guide on that. And even on that value chain, we expect private sector in financing and lending, they will have an opportunity to have regulatory clarity in terms of contracts, enforceabilities, and then just ensuring that they have control of their securities as they are going into contracts with their potential customers. So the opportunity is there, but of course it comes with a few challenges that should be addressed as we proceed. So one big challenge for our market is the fear of what happens to KPLC. I think we've seen the headlines predicting some things, but there's also a huge opportunity for them to streamline some of the things that the consumers have been looking at. For instance, if you look at the opportunity for retailers, they'll be able to take away burdens that KPLC has had in terms of just managing the small consumers, ensuring reliability. So there's an opportunity for them as much as there is the perceived fear, because I would call it perceived because there's a huge opportunity in making money from wheeling and all that. I also see a regulatory challenge. One of it has been highlighted in terms of some of the things that have not been defined, like who gets to take the burden of curtailment, how the formulas to some of the commercial aspects of the contracts. And then also there's a challenge in the grid infrastructure constraints. Is our grid ready to have the open access? And then actually the summary of the constraints would be the transition phase. There's a bit of ambiguity. Are we live? When do we get live? What are the processes for each of the listed participants? So, for example, the existing IPPs, do they get a chance to renegotiate the single PPA with KPLC, or can they get their own off-taker now and adjust their contracts? So actually, among the many challenges that could be foreseeable, the biggest is the transition phase, and how can you define the timeline around the transition phase? Are we talking of the known 100 days in office or a full year? So I think that ambiguity needs to be addressed right from onset. And one smaller one under it, which is the enforcement. As a country, we really have a lot of regulations, policies, and acts, but we hardly have a clear monitoring and evaluation around enforcement. So it's on paper, but no one is enforcing. And most of the time, the people who lose are the people who their money was in it. So either the financier, the lender, or even the generator in this case. So there's opportunity, there's challenge, but most importantly, a decision had to be made, and the world is moving to that direction. If you think about the big projects that are currently in our region, Mission 300, if you have your load and there's a mine site in Congo that can pick it directly, you can use the transmission line that is already there, or the regional agreements through either Africa 50, Mission 300. So that opens up our market really to a bigger region. And so as we are looking at the challenges, it's an opportunity for us to move to the next phase. Thank you.
Yeah, thank you. Thank you so much, Kaluki. And I also like that you bring about the kind of regional thinking and what we are seeing from other markets. Just to support you on that, we are seeing a lot of uptake of willing deals, especially in South Africa, which is now almost overshadowing what they are doing in the REIPP procurement. So interesting times for us. But today we are actually very lucky to also have Ketraco and Kenya Power in the house. And I would want to first go to Munoru from Ketraco. Of course, you will introduce yourself and say what you do at Ketraco. But the transmission network as is today was built around a single off-take, people building power plants and selling power mostly to Kenya Power. Now we are asking the transmission network to carry many independent commercial transactions going in different directions all over the place. And the question really, and I think was also alluded to by some of the panelists, is our infrastructure ready? Are the lines, the substations, the metering equipment, are we technically ready to support open access today? And if not, what is required?
Thanks, George and ESAC for this forum. To respond, I will take you back slightly to the origins of Ketraco, which was sometime in 2008. And Ketraco came about with the mandate to plan, construct, operate, and maintain high voltage transmission stations and lines. And this high voltage starts from 132 kilovolts, 220 kilovolts, 400 kilovolts, and 500 kV kilovolt HVDC, which acts as an interconnector. So when Ketraco came into formation, the transmission circuit length was approximately 3,000 or thereabouts. And at this point, it has grown to more than 9,000. And this represents Ketraco contribution of about 62% to the transmission circuit length. And the purpose of this, or the focus of this transmission investment has been primarily to evacuate generation from the generating plants, has been to extend the network to unserved areas, and to act as interconnectors with our neighboring countries, and also to reinforce the grid. Some sections have had very long distribution lines and running hundreds of kilometers. And although the customers were served by these distribution lines, the transmission grid came reinforce this network. So with this capacity in mind, looking forward, KETRACO also is looking to add approximately another 3,000 within the next 5 years. That is 3,000 kilometers of circuit length. And this capacity also comes with a requirement to add transformation capacity. And the transformation capacity is upwards of 8,000 MVA of transformers, which will be added within that same period. So in terms of the readiness, I think we are working on it, and we are on top of it. And with these figures in mind, I believe the sector can actually take up the network as is, and even have a look ahead on what the network is going to look forward. Of course, when it comes to investing the transmission network, we don't do it in isolation. This starts by determining the demand growth and demand requirements of the Kenyan grid, and then identifying the least cost generation that will meet this demand. And then thereby, KETRACO comes in and designs and builds the transmission network that will connect this load demand to this foreseen generation that should be coming in to meet the load. So in a nutshell, that I would say the looking backwards and looking forwards, the network, the transmission network has the capacity in most sections, even as we continue to expand into unserved areas and to reinforce the grid. Speaking of this, we've also had reinforced the network around Nairobi and many other urban centers to have from the initially served 132 kV network to now we have rings of 400 kV network around Nairobi. The Lake region, we have up to 220 kV serving there, and the coastal region, we have upwards of 400 kV network. So this has tremendously increased the transmission capacity within the network within this short period, and the future looks even more ambitious. Thanks, George.
Thank you. Thank you, Noro, for that. I see you're telling us there's a lot of planned transmission and investments generally in transformation capacity and transmission lines themselves, which should enable us to see these willing deals come through. I want to kind of also go to the distribution side of this and ask a similar set of questions. And we are again graced by Brian from KPLC. And Brian, KPLC has historically owned the distribution lines and sold power to consumers through these lines, and a bit also of the transmission system. Now, with these new regulations, a large consumer can just decide to, use your lines and not really buy from you, and you are left basically with the infrastructure responsibility and not really the commercial relationship between you and the consumer. How do you think this separation will change your day-to-day network management, and also or is the distribution system ready to kind of handle these transactions from multiple suppliers, both from a technical and commercial standpoint? But you can start with introducing yourself and what you do at KPLC.
Okay, thank you for the question. As mentioned, my name is Brian Mishani. I work for Kenya Power. I've been at the System Operators Office for the past almost decade. And we've been involved in a lot of development of this particular regulation. So I'll start off with the same item that Kobe just spoke about, that is Monoru. The question of technical readiness is still something that's we're still reviewing. There's been a lot spoken about in terms of metering infrastructure and all that. And yes, Kenya Power has been stepping up its smart meter rollout, but there's always continued improvement of understanding not just at the meter, but behind the meter consumption and production. So that's something that is being operated from the metering level. There's a question that I see Catherine Irura also asked about, which is having multiple supply contracts. The modalities of that still are a bit up in the air because the regulation is still quite recent. So there's teams that are working on understanding these regulations and unpacking the information that's in them. Now, when you come into the distribution network, yes, we're revising the distribution master plan as Kenya Power, and there's continual network expansion from the Ketraco substations, from the new Kenya Power substation as well. So on our 66 and 11 kV network, especially around Nairobi, which is a bulk of the country's supply, there's been a lot of reinforcements. Now, the question of curtailment also comes up. I've seen a lot of questions around what exactly it means when you're speaking about curtailment. And my 2 cents on this is that the technical assessment before being awarded wheeling agreement will also include demand projections. So as Raymond spoke about, there may be a year or 5 years or a term for the bilateral contract. And in that term period, we would need to demonstrate that the existing transmission and distribution infrastructure has adequate capacity to evacuate power to the end consumer. Of course, now on our end, there's, as you mentioned, there's a possibility of breakdown of relationships where you don't have the relationship, but you do have the line. For that, of course, now in terms of remuneration, open access, of course, comes with its system charges. The tariff design might need to change from revenue requirements for each of the different players to actual billing charges for specific lines and infrastructure, so that now whatever that may take the form of, I think it's still work in progress under the market rules that will still follow this regulation. And yeah, on the loss of relationship, of course, as has been mentioned, this also offers an opportunity to Kenya Power to continue the development that we started on. We've consistently been reducing losses year by year, and bettering the quality of supply. So we've had lower side figures, lower side figures, and it will be important to maintain or improve the quality of supply from the utility perspective, to also support these regulations, but to safeguard our own customer base.
Yeah. Thank you, Brian, for that. And I see we have quite a lot of questions from the audience, and with the indulgence of the panelists, I will switch to at least address some of these audience questions before I actually come to my last round of questioning. So the audience, preferably if you can address your question to a specific panelist, but otherwise we will respond to all of them. And we have a first question. I can't see who is from. I think it's Leo. What are collaboration opportunities for sodium nickel based energy storage systems? I will hazard to direct that at Raymond and maybe just respond to that for us.
So you're saying that collaborative opportunities for energy storage technology around sodium chloride?
Within the framework of open access,
within the
bulk
framework
supply
of
markets.
So as it is within this particular framework, I think I was responding in a private chat, it's very much technology agnostic from a regulatory perspective. So maybe now from the off-taker, that is the retailers and what, so if they want to invest in storage, then it's upon them now, because In storage, you'll be looking at fast response rates, we'll be looking at ramp up, ramp down rates and whatnot, and all this translates to operational cost. So if somebody wants to invest in that particular storage technology, then they'll be driven by that. But from a regulatory perspective, we are very much technology agnostic. Basically, what we want are dispatchable technologies that can address system issues at the bare minimum in micro milliseconds, as Brian will definitely agree with me.
Maybe just to extend that from the market segment, are you also, I didn't quite catch it, but is the regulation also considering some sort of ancillary services market? And
what is presented in the regulation is basically what we call a static diagram of the market structure. Basically, it's an institutional diagram, but within the dynamic diagram, which is basically the operational, we have the capacity market, we have the day-ahead market, and we have the intraday market, as well as the balancing or ancillary services market, which will be overseen by the system operator, because largely this is an operational issue. So yes, we are definitely overseeing balancing and ancillary services market.
Thank you, Raymond. I'll try to move quickly since there's many questions and still more coming. Please keep typing your questions. We will attempt to respond to as many of them as possible. Kware asks, given that large commercial industrial accounts for over 50% of all electricity consumption, will their shift to dealing directly with the producer affect how KPLC charges small-scale consumers? I would ask Brian to have a first stab, and if EPRA would want to also comment on that, it would be nice.
So that has been one of the major concerns that we've been looking at from the utility, in that when there's a market framework and you have 6,000 customers who account for 50% of your revenue, and you're running some form of cross-subsidy, there's a potential of the residual customers having to be on an actual subsidy, not just a cross-subsidy. And for that's specifically for the Lifeline tariff and any other customer at that band. So it's something that we are continually reviewing at the moment, and Kenya Power is preparing, of course, its views to EPRA. So I think that's a process that's still ongoing.
Understood. Any additional comment, Raymond?
No, I think as Brian has said, it's a going concern, and basically I believe that these defections ought to be managed, because our understanding from a regulatory perspective is it ought to be over and above existing load. What do I mean? Basically, a large power consumer that is currently enjoying supply from KPLC, remember there has been investment made to that. But if for one reason or another, this particular large consumer requires consistent 50 megawatt supply, but KPLC are not able to provide 50 megawatt consistently, but basically, let's say 20 or 25, then this large power consumer has every right to engage a bilateral to get the extra supply reliably. So basically, this is a conversation that is ongoing, and I'm glad that KPLC are taking it on board and they're reviewing their own tariff application with this in mind.
Thank you. We have another question from Cynthia. If there is an eligible consumer consuming over 1 MVA and a generator is ready to build the system, what are the next steps? In short, is open access live? Where exactly is the starting point? I think this goes to you, Ray.
Should have bought in a bottle of 1 liter of water. Anyway, so essentially, if there's already determined generation point, there's already determined load point. I'm sorry for the background noises. We work 24 hours here at EPRA. So if there's already determined generation point and load point, so basically what needs you need to identify, do you want to access it at distribution or transmission level? And then now you need to engage the network operators and undertake what we call grid study to establish whether there is available transmission or distribution capacity. So that would be the first point where now this particular individual will have to apply either to the tracker or to KPLC to ascertain the availability of that transmission or distribution capacity. And then, of course,
apologies.
maybe just to issue the regulation has a clear step-by-step guideline on basically what will be the various steps to undertaking once now you've submitted your application to the network operator.
Thank you. I think in summary, there is a step-by-step guideline with the regulations, and we should review that. Moving quickly to Axel Frank, I think he says this is really a great initiative, and I salute this. On curtailment, if the contracted energy cannot be delivered because of transmission congestion or network constraints, who bears the curtailment risk? Perhaps between Kobia, Brian, and again Raymond, and maybe Edwin actually, because Edwin actually was thinking also around the same thing. We could try and tackle this starting with Kobia.
Thanks. My take on this is that the system operator or the network congestion is a system issue, and the priority is to protect the system before protecting individual interest. And when drafting these agreements between the generator and the off-taker, they have to keep this in mind, as it is the regulations have given the system operator the leeway to protect the system as best as they seem fit. And of course, the regulator will come in to check that the system operator is doing this correctly. So when drafting these bilateral agreements, if I can say they're bilateral, the two parties need to have this in mind, and probably some scenarios would be where probably if there's no generation, then there's no revenue, and then that means the curtailment risk lies with the generator. Or if they so wish, it could be drafted such that there's a clause on deemed energy, such that some risk is transferred to the off-taker, as long as the generator is available to produce power. So this boils down to the agreements between the two parties, and that's where the risk will end up.
Maybe switching to Faru, what are your views on the same?
Yeah, it's one of those things that even in the other markets where we have operations is debated and negotiated for a really long period of time. There's no stable market position or something you can say is market practice. I think at some point the bilateral agreements will have to define what are the permitted levels. So it looks like the network service providers will need to be very clear based on either historical data or forward-looking plans and maintenance schedules on the times they expect to be offline. And if then, whether it's the SO that has curtailed you because maybe there's congestion at the network service provider that has a maintenance issue and you're curtailed, then you'll have to agree thresholds, I think, and at some beyond a certain threshold, because we have to give allowance for that, for maintenance and the rest. Beyond a certain threshold, then it becomes a question of who's going to take that risk. If the project is project financed on an non-recourse basis, lenders will need that to be very clear. Because if there's no transmission, then there is no revenue for the project and they're not getting paid. So it will become a very critical point for clarity, and we'll have to find a commercial solution that works.
Any additional view from Brian or Raymond on the same?
I have something which builds into this. So you start off first on the understanding of the different types of risk that would exist with this type of framework. So there's the economic risk, which is based on the expected volumes that you expect to be generated and off-taken, and that has its own financial model. And then now there's the technical risk, which, as Noru spoke about, is more about ensuring the system is as stable as possible. The best case scenario is, for instance, giving a practical example, let's say you want to wheel 5 megawatts on a 66 kV line with a capacity of, let's say, 50 megawatts. The line has that capacity. And right now it's applying about 30. So that means that in that period of time, technically speaking, you can inject the extra 5. But what it means is that for the period of time that the contract is valid, then I should have the ability to evacuate that extra power as part of the technical assessment. Now, of course, there falls into different parameters, things like force majeure. Let's say you have another evacuating line that's off, you need to transfer customers to one substation or something of the sort. An act of God, in 2023 and 24, we were having big issues with El Nino and the number of 66 kV lines that went off and the substations that were flooded. Climate overshoot is becoming a real problem, and we're going into another El Nino period, according to the Met Department. So all of those are different factors. But generally speaking, the economic model and the technical model should have some form of concurrence. You can't really just develop one. But in the case, as has correctly been said by Faru, you'd have to have thresholds so that you know that, let's say, over 1 year, this line is going to be off for, out of 365 days, it will be off for maybe 2 days for planned maintenance, or it will have a certain availability factor and all those different parameters. Then beyond that, you develop the models for that. But again, Kenya Power is still reviewing what exactly it means. But open access to some extent is not something new. We've had the models with Two Rivers, Tatu City, and all. So there's a service level agreement that you have between the bulk purchaser and the network service provider.
Thanks, Brian. I will actually skip you, Raymond, on this one, and maybe take us to Kaluki. You will respond on the same, but I also additionally want you to respond on a question from Andrew. Do we see the new market being able to encourage battery storage investments? And secondly, can solar and wind producers participate effectively? And I want you to really comment a bit on the wind side. I know you're very active on the wind side. So please respond to that. And also if you have additional comments on the previous question, Kaluki.
Thank you. I'll reserve my comments on the previous question and go to Andrew's concern on the issue of battery, if I got the question correctly. I think the answer is still on the bilateral contract, because it's not really specific or optimally direct. So it leaves the opportunity for the contract agreements. There are a few things that will actually be the factors. For example, probably the off-taker will be looking at the most competitive, or the financier will be looking at if the opportunity, for example, solar plus battery is optimally the best financial decision. So this leaves the discussion between the parties, but the regulation hints to allowing the bilateral agreements to be discussed between the parties. On the issue of solar and wind, I want to get your question.
The question is
Can
more,
solar and wind producers participate effectively? I'll say confidently yes. I think it's how you look at the regulation, either as an opportunity or as a challenge. They're both there. Why I say so is because you are not limited to what option. For example, if you have a customer who you have a 1 megawatt and above, an eligible customer that is ready, and you followed the steps and submitted an application, and you've been able to meet all their conditions from reliability, bankability, you've agreed on a tariff that is, and there's a line that is ready, there's a willing, within the cost, it fits to the willing tariff, and there's a line that can carry the electron, I would say yes. So it is for us to use the resources that are currently available. For instance, we already have wind atlas of the country. We also have the solar atlas. So if you do not do your research correctly and you're getting generation from a place where there's no ready line, then you cannot really blame the act for limiting you. So I would say that any opportunity has to go with factors of readiness, factors of what is available. Of course, there's room for continuous improvement. Like someone has said that we have to keep improving the lines that are existing, building new lines. So it is us to use the existing resources and determine the immediate opportunities that are there. And we already have a lot of talks of ready plans. So it is us to check, are there ready lines? Is there an opportunity to have a willing agreement tariff? Do I have all the steps ready to submit an application? So I do not see I did not see anywhere where the regulation is almost explicitly favoring the base loads, the geothermals and the hydros. The opportunity is there for all of us. It is for the participant. If you're the consumer, the eligible consumer, or you are the generator, or you are the retailer, it's for you to see how ready you are to submit your application. So yes, you can do that.
Thank you. Thank you. We have another question from Sami, and I think this goes to Raymond. With the cross-subsidization model at risk as large consumers migrate, what specific regulatory mechanisms are being considered to prevent domestic retail tariffs from spiking for small consumers? I think you had partially responded to this, so just in a succinct way, you can additionally respond.
Sorry, George, I think I was a bit muted. So this particular question on cross-subsidization, I think that has been the regulatory mechanism for a while that we've been using to at least make tariffs affordable, especially for our lifeline consumers. But what we are currently now trying to model around is now if we have a couple of number of retailers coming on board who have already secured, sort of applied for retail licenses. So there's going to be sort of a policy, a deliberate policy, where now up to a certain threshold, be 25, be 35%, that they'll be catering for now the lifeline consumers. In terms of the large consumers leaving KPLC and probably the pressures will be felt to the end user consumers, we actually don't foresee that because like I said earlier, unless now these large consumers, basically it's an additional load that they're taking from the market, they'll continue to be supplied by KPLC. But of course now the transition mechanism in place are that how do we ensure that KPLC, whatever tariffs they're charging these large consumers, is basically reflective of what will definitely be prevailing within the wholesale as well as the retail market segment.
Thank you, Raymond, for that. We move a bit quickly. There's another question from John. John asks, is this open access open to generators with existing PPA with KPLC? What is the transition process to this? I think, Raymond, this again goes back to you.
So the existing PPAs, of course, we are all aware they have contractual obligation to KPLC, and the straight answer is no. They will not be eligible to basically participate in the wholesale market or even participate in a bilateral agreement with the large off-taker, but only if they prove that indeed over and above what they are contractually obligated, they can actually provide additional capacity. Then at that point, they'll subject that additional capacity to the wholesale market or to the bilateral agreement once they have identified an off-taker.
Maybe also same question to Faru. What do you see as like contractual complications? Supposing you already have a PPA with KPLC and maybe I have some additional capacity that I want to then go into wheeling with.
As lawyers usually respond, that depends on your contract with KPLC. But from my experience, those PPAs will have exclusivity provisions that say you can only supply to KPLC. That's number one. And then there are also contracted capacities. So it just depends on your agreement.
Take that answer. Then we move on to Said. Said asks, on curtailment, if the contracted energy cannot be delivered because of transmission congestion or network constraints, who bears the curtailment risk? And I will again hazard either Brian or Munoro to answer this one. In your view, I know this is still kind of under discussion, as you mentioned. Yeah, but just try and respond to this.
Yeah, but Munoro had actually covered it brilliantly in his assessment. So what he had mentioned is the two counterparties, of course, now, first of all, one bears supply risk, one bears demand risk. So the generator bears, of course, supply risk. If they can't supply, then that's on them. And demand risk is borne by the customer, because if they do not provide the demand, then that's on them. If it's an issue about the line, then that was what we were talking about. We need to define the frameworks around that. So that question, thankfully, had been covered by 3 people. Actually, we all had our own very interesting takes on it.
Then we move to the next one from Catherine. What's the rationale on limiting the number of retailers a consumer can buy from? If there are agreements that agree on capacities and separate metering. Maybe Raymond?
I think at retail choice, this is basically at the end user consumer. This will come now once we have fully operationalized the market. The electricity market segment will be implemented in phases. So we are going to start with the capacity market, then we move on to the day-ahead market, which will, of course, will consequently also have the intraday market. So at the day-ahead market, you'll basically be having one retail supplier for the day in which they're going to supply. So if you bid for supply tomorrow, you can only have one retailer supplying for you on that specific day, on that contracted period. So you cannot have multiple retailers or multiple suppliers, because the metering point will just be one.
To the next one, energy storage providers, and this one is from Black Leo. Energy storage providers are missing infrastructure layer that makes open access electricity markets actually work efficiently and sustainably. What are the IPPs doing to partner with suppliers? Kaluki, you can attempt to respond to that one.
Sorry, which question did you read? The one from Leo, energy storage
From Black
provider?
Leo, yeah, exactly. So he's asking, what are the IPPs doing to partner with suppliers for energy storage?
What are IPPs doing to partner with suppliers? I think it's a willing buyer, willing seller. It goes to, I would look at, for example, what's the storage, if the opportunity, not the opportunity, I would look at the technology the storage as. For example, we've been moving from acid to lithium. Now we are talking of nickel lithium. We've been learning of the different, unfortunately, we are a consumer market. We are not majorly a manufacturing market. And so we always have to learn by using the technology that is there. So currently we are learning that, for example, the lifespan of lithium batteries in hot temperatures is not so good. It will not give you the warranty period of the full plant. So like in solar plants, you'll find 3 to 4 years. So is nickel giving a longer period because of temperature controls? So I think really it is for the IPPs to keep doing market research and understanding what the technology of the battery is offering and making a decision based on the bankability in terms of what's the cost vis-a-vis what is offering. So there's no direct answer to whether there's any advantage to any specific supplier. It's a willing buyer, willing seller who is convincing who and who is giving the best solution to our market problems. Because really, if I'm investing in a 10-year warranty period of solar panels and the batteries can only last for 4 years, what are the formulas that we are supposed to use in terms of operation and maintenance cost, changing of major parts cost, and that applies across. So the answer lies into what is the problem being solved and who is offering the best competitive in terms of price and technology.
Thank you for that pragmatic response, Asante sana. Now we have a comment from some the strategists. Some you can reach through the DMs. You can contact us, and then we can put you in touch with whomever you want to talk to within this call. And then to his question, is Kenya having challenges raising the large investments needed for transmission? If so, why? Yeah, I think that one, Kobia, you can respond to that.
Okay, I wouldn't narrow it to merely Kenya. I believe globally there's a shift in where the financing institutions want to put their money. And unfortunately, it's not so much on the transmission sector, probably in terms of the recovery period and the scale of the investment that is required. So luckily, Ketraco is cognizant of this and is working on some progressive financing mechanisms that will ensure that the grid continues to grow even with limited financing resources from the traditional investment partners. So it's not a Kenyan issue; it's globally there's less investment in the transmission system.
Just again to support you, we are seeing the same challenges. Some across also all the way to South Africa, they're having challenges investing in their transmission, building out transmission line that is now delaying generation, and so same problems. I don't think it's unique to Kenya, and as Kobe has rightfully mentioned, Sam again continues in the same questioning, and this one goes to you, Brian. There's a narrative that KPLC's financial health keeps away investors. Is it true, or is this risk perceived?
I wonder exactly how it
Difficult
keeps
one.
away. Well, given that we've been very, very good over the past few years, declaring profits that are only rivaled by Safaricom. Yeah, it's our health is fairly healthying. But that being said, what Monoro has also spoken about is very true, as is also captured under the Energy Transition and Investment Plan. The investments to support renewable energy and net zero targets are absolutely astronomical. Basically, it's like we're investing the equivalent of everything that we've invested year on year, basically till 2050 to support the energy transition. So it's not really anything else, and it's not the sector again. It's not as ring fenced as it was before 2019 with the Energy Act, but yeah, it's a going concern as well for us, not just with Ketraco.
Thank you for that. Then I think we have it's more of a comment congratulating you, Dennis. Dim generation cost will be a key element of the discussion in such a case. Well put. It's from Jesse towards you, Dennis. Then we have a comment, I believe, from Engineer Mativo, our senior. The 5 agreements agreed between Ethiopia, Kenya, and Tanzania clearly address a lot of issues, risks, and challenges being discussed. So he says these are discussed in the agreements. Then transmission constraints, transmission availability, and thresholds are defined in line with the grid code. Thank you, Daktari. I think those are just additions to the discussion. Then Jesse comments on force majeure, as Brian talked about. The COVID-19 period showed how poorly we came up with the clause. It was not well handled during that time between the off-taker and the generating plants. I think that's just still a comment. Then Cynthia, if I zoom out to look, I think that means look at the bigger picture. What exactly is open access trying to solve in Kenya? there is not a booming industrial load where demand defeats supply. I think that's an interesting perspective. And perhaps the draft of the regulation can try this first. What exactly are we solving?
First and foremost, I think what we are solving is very much clearly outlined in the objectives of the regulation, George, and probably I'd request Cynthia to basically take a few minutes and go through the regulations exhaustively. But the narrative that there is not a booming industrial load where demands defeat supply, from my own personal perspective, I've always held the opinion that whatever demand that is not being made is largely because now we have network constraints. Because, George, you're very much familiar, over the last 2 years, or rather 1 year, we've had quite a number of interests, especially in data centers. And most of these guys were coming on board and their power requirements were huge. But then again, you realize that, yes, the generators are ready, but at the same time, we were looking at our network. And at that time, when Dennis and Brian do the grid studies, we did not have that available transmission or distribution capacity to actually wheel some of this, leave alone them not having an incentive to even invest in additional network. But this particular open access framework provides an opportunity, both a revenue stream by the fact that there's already there will be a sort of a use of system charge or a wheeling charge that will be put in place, and at the same time, this will motivate Brian and Dennis at Ketraco and KPLC respectively to even invest more. So I think, for me personally, that demand is largely unmet because we really don't have the network for it. And this regulation, this new framework, provides an opportunity for us to actually go for it, to invest in our network. And, at some point, the demand will definitely not defeat supply. Thanks, George.
Thank you. And I'll give Kaluki a chance to also respond to the same. So what are we solving?
I'll begin with domestic demand. We have recently had that between 5 p.m. and 8 p.m. there's load shedding. And in this regulation, there's a very big opportunity in retail, wholesale. And if you look at examples like Tatu City and the special economic zones, they take away the burden of KPLC's reliability, transmission. And so before we even think of industry, there's a huge, huge demand in domestic problem that can be solved by this regulation. So we do not have to wait for when the government has enough money to solve the domestic gap that is already there. And so, yes, there is already demand on the domestic side, and there is enough participation that can be solved. But coming to your question on industrialization, a typical power plant in developed countries takes 3 years. In developing countries like us, I think our shortest period for a proper power plant was 7 to 10 years. And so should then the regulator wait until the demand is screaming for them to have regulations ready? No. So I think the regulator has really gone ahead of their time and prepared the guidelines so that we can actually invite investors. And actually, at the end of the day, then electricity will be an enabler and not a revenue collection opportunity, because once it's competitive, it gives an opportunity for all parameters to bring down the cost of power. And so that attracts industrialization. And so there's actually a problem being solved. And then lastly, the world is talking about Kenya being a strategic position for Africa. We have all these Mission 300, Africa 50. So are we going to wait until there is a plant, let's say, if I would use a political statement, Dangote has his plant in Tanzania and he needs power. And so because there's no wheeling between Kenya and Tanzania, then someone has to build it. So I think there's really a lot of problems that the regulator has solved ahead of time. It's upon every player to see where the opportunity is and take time and participate. Thank you.
Thank you, Kaluki. I know, Faru, a lot of clients are knocking at your door and asking you such kind of questions. So what problem are we solving? Same question.
in addition to what has been said, there are people who have even the people who already have captive solar plants in their premises, but they have run out of space. And they have space elsewhere, and they want to use that space to generate more power that they can use on their plant. That's one case scenario. There are generators who have land in Isiolo, for example, where there is very good irradiation, and they have customers who are willing to buy power here. That's another opportunity. We are having these very difficult conversations between IPPs and KPLCs after the moratorium, where KPLC is trying to move away from things like dim generated energy, from that kind of a market. If we had a wholesale market that was operational, KPLC would also be buying the market, and it would be looking for the cheapest price rather than entering into these bilateral agreements. So I think this, as Kalukia said, these regulations are opening up our market to a lot of possibilities and solving a lot of problems. We keep having these difficult conversations with KPLC and with the government around letters of support because there is a single off-taker risk. If this is implemented, I mean, we are going to be very easily investable as a jurisdiction. So there are a lot of problems that we are currently facing that will be opened up if these regulations are actually properly implemented.
Thank you. I see the regulator is very happy that the regulated are actually answering all these questions in a very interesting way. Yeah, there's a lot of benefits, and I won't even add any more to what has already been said. So we move to the next question. Vast Devotional asks, will KPLC meter power discharge BESS separate from, say, wind generated power, BESS being a new addition after development of some greenfields had begun? Brian, if you can respond to that.
So each of these technologies, of course, now has its own expected levelized cost. So BESS is no different. The levelized cost of storage is different because BESS is not a generator. In fact, when you're looking at the net energy balance for BESS, it's negative because of the losses that are incurred. So BESS has a role to play, but most likely what would be expected is that you would be metered for the energy, of course, that you're consuming. And whether or not you use your own BESS to supply yourself, now that's on your side. The financial models for BESS are still work in progress. It's one of the reasons why the utility scale BESS projects are still going ahead, including the technical advisory in terms of the sizing of all these different BESS projects for wind and solar. So that's still work in progress. It's also tied down to the ancillary service side, where there's an ongoing study, and yeah, there's still a lot of work in progress with BESS.
Thank you for that response. We are getting very many questions, and you will bear with us. We normally have this session for about an hour and a half, but with the many questions, I'll just ask for the panelists to kindly indulge us for the next 30 minutes. We try and close this off by 8 p.m. So I will continue with, it's just a comment from some of the strategists thanking you for the answers and saying that he's happy to engage. Then I see Catherine is telling Cynthia to see her after this. Then the joker has a serious question. When it comes to mini grids, will they have to apply for generation, distribution, and retail licenses, or which license are they eligible to apply for? Maybe Raymond?
Yeah, thank you so much, George, for that. Of course, mini grids, by their own nature of operation, they already have a generation distribution and retail license, because we do approve their tariffs and we do approve their generation and distribution license. Maybe what the joker was asking now, when it comes to the whole market participation, every licensee now, if a mini grid developer wishes to participate in the wholesale market, basically to buy power in bulk, will definitely have to sign off the market participation forms, and definitely that will assign them some technical and commercial responsibility and risks, because essentially they will have to become now a PRP for that sense.
Thank you for that. Florence says good conversations, informative talk from Sapere. Then it's Gashira. How does this agreement compare to the already existing captive plants? So I guess what they're asking is, how does wheeling compare to the already existing captive plants? Maybe Faro, you could answer that.
Yeah, for the captive plants, what we usually call behind the meter, that is generation plant that is located within. I think, did you lose me for a second? My screen went blank.
Yes, we did. We did. Please just repeat.
Yeah, so the difference is, for captive power plants, the consumption is usually behind the meter, so it doesn't go to the grid, and it is on the side of the customer. The customer generates for its own use. Now, when it comes to wheeling arrangements, generation is offsite, and then the wires that are owned by Ketraco or KPLC are sort of a highway that you transfer your generated power to your own site. So that's the way to think about it. Rather than building out your own captive power plant within your premises, you can have that in another location, or you can buy power from another supplier other than KPLC, but using the KPLC and the Ketraco system.
Okay. I think that's quite clear, and we move on to the next one. Yeah, it's Ndegwa's, just a comment, full information. I look forward to learning, hopefully. Msapere comes back again. I beg to differ. BESS is both a generator and a load. It is considered as both, regardless of their inherent loss. In many developed countries, grid codes. I think this is a challenge to you, Brian, so I'll bring it back to you.
Okay. So now, when we're developing, let's start off from the technical parameters of this, where you're looking at your different applications for BESS. You're looking at BESS being applied in three different ways. Either energy arbitrage, which is generally what the financial model is based on. Number two is for frequency control and other ancillary services, including black start. And pricing of that methodology for BESS is extremely difficult, actually. And similarly to arbitrage, is just the same questions of how KenGen is interested in applying the BESS, reducing curtailment of renewable energy. Now, when you're looking at it in terms of specifically the financial model and how that applies, we haven't yet defined, or let me say this, the sector through the regulator has not yet defined a specific tariff at which BESS is going to be charged at. If you have utility scale BESS, will not say that you're going to buy power at 3 cents per kilowatt hour or whatever rate that you're buying it at. And also, for the clearing price, because that's based on the financial model, that's going to be market-based signals, because that's what we anticipate. We anticipate that we will move into the market-based signals for BESS. Now, BESS is going to put in both a supply and a demand bid, and that's the way that it applies in the grid code. You'll put in a demand bid when it is preferential for you to buy, and you will put in a supply bid when it is preferential for you to sell. And the only thing that BESS actually displaces correctly is largely thermal. If you're looking at BESS as an endogenous cost into a plant, then it drives the capital cost of the plant up. the marginal cost of the plant might still be zero, but the capital cost still reflects in a certain way. So when you're looking at the BESS conversation, there's still a lot of modalities that need to be ironed out. Is because the first question is, are you looking at a standalone BESS? If it's a standalone BESS, then it's behind the meter. So that means that what we would see is the overall consumption that you have. So if you buy power for your own local consumption as well as charging your BESS, then it's only going to look at whatever energy has been imported or whatever energy is expected to be exported. If you're looking at a power source plus BESS, say a virtual power plant or captive generation with your own BESS, then you'll develop your own amortization model based on that. And you'll develop your financial model based on that. Now, again, the frameworks for that still haven't been 100% corrected. The financial lifespan of BESS these days is anticipated to still be 20 years. The technical lifespan, increasingly, you're seeing 30-year BESS. More and more, because what we're seeing a lot of investment in is lithium iron phosphate, specifically from China for utility scale BESS at a C rate of 0.5. I apologize for going super technical for those who have not interacted with the BESS side, but even working on a single charge-discharge cycle during a day, you will end up with a certain value at the expected end of life. So, yeah, BESS has its complications. It's not straightforward. It's something that the sector is working on.
Thank you so much. Msapere, I believe you have your response. But again, feel free to reach out if you feel that you still need some answering on that question. I see what I believe is the last comment. I share a concept. Is it feasible? This is from Dagwa Gedenji. Is it feasible to build an energy city in Turkana County, then as industrial city? We can ship 2 million of youths out of Nairobi to Turkana and construct the new city. Kaluki, Ray, I'm working with who has smiled the most. Kaluki, maybe you can start us off with a comment.
Maybe this time round devolution will work. Yeah, the studies show that the potential of Turkana County is quite high, both in wind, solar, even including what is it called, oil exploration that actually requires solar. And by the way, we have an airport in Isiolo that is not so far away from. We have an international airport in Isiolo that is not so far away from Turkana. So I agree with you, Ndegwa. Maybe we should. I think the word is making it attractive for the investor and for the consumer, because the investor has to have the consumer. But I really agree with you. It's very, very possible. And I mean, we have special economic zone models already. I mean, I know not Tatu City, Konza City is already operating on a retailer licensee or something like that. So it's possible. And the tracts of land that are in like Turkana are quite ripe for such kind. And we will not have issues of relocating people. It's available land. There's no issue of line of sight. It's bare, the sun is there. And then we have mountains that have wind. So let's do this. Maybe you should visit there and try and see whether the county can adopt this. Because within the regulation, actually, there is also a county perspective in terms of, I think in the National Energy Plan, there's the county energy plan that I think the regulation also caters for. So really, it could sound like a funny comment, but it could turn to a serious gem if it lands in the right table.
I know, Ray, you are in one way or the other involved also in the INEP process. Just like expanding the thinking to what Ndego is saying, and as Kaluki is commenting, maybe just respond to that.
Yeah, I think first and foremost, I just want to apologize to Ndego. I didn't mean to come out smiling. His comment is very valid. And the feasibility of it, him establishing an energy city in Turkana and actually an industrial city, The feasibility aspect, it's for him now to establish whether or not it's feasible. But in terms of the various regulatory frameworks, this particular one that is the subject of our discussion very much provides the avenues for that through open access, through the fact that they can also, generate and sell to the wholesale market, or even they themselves can get the energy from the wholesale market. But most importantly, I will advise Ndegwa that his is a vision, and it's a vision that he needs to take it up if he's serious about it. And I know he can even go further and even reclassify it as a net zero carbon industrial park. And I'm sure he'll attract a lot of funding to establish feasibility, because there's a lot of funding out there looking at that. So even in terms of INAPS, the county aspect of it is he can actually engage the county government of Turkana directly to sort of provide him. I know in Turkana, most of the land is community. So he can actually engage the county government. They can establish land where now he can end up building, which is what I call it now, the net zero carbon industrial park. So all dreams are valid. Ndegwa, you go for it. As a regulator, I'm here to support you. I know Edwin is ready with his billable hours. He can also structure those things for you. Brian is ready, and even Kobe to will whatever energy you want to be willed. Go for it. Thanks, George.
The association is also ready to support in any way in extending power and building demand centers outside of Nairobi. Now I want us to come to a close. I see there is I think it's still a response to the best comment. So at the risk of triggering Brian again, so according to Brian, any investor willing to invest in a standalone ancillary services will face feasibility challenges, both technical and economic. Brian, if you can respond very succinctly to that, because I think Kobe also needs to put in something either on the previous question or on this one.
Okay.
Then
let me respond.
Okay.
Let me respond like Edwin. It depends. So the problem is that there's no precedent. So it's not really that you'll face challenges. It's just that there's quite a lot of due diligence. You see, if you're interested in investing in geothermal, we've had experience with geothermal, we've had experience with hydro, we haven't had experience with utility scale bus. So it's not really challenges. In fact, we are very, very welcome. I think Munoru will mirror me when we say that system operations is really looking forward to having BESS in the grid for various reasons. So yeah, it depends.
Munoru will give you the final comment in terms of the questions and any additional comment you'd want to add.
Thanks, George. I will agree with Brian. Indeed, as a system operator, these ancillary services are very much needed. Of course, there will be a challenge of doing this technical feasibility, because you have to go to the very small details, the very small signals, and know how you will be able to pick up on them and respond to them as an ancillary service provider. And probably to close, I would just want to talk to Ndegwa and say that indeed this is an actual and a valid idea. I've seen some countries have this concept of energy islands, where they have offshore wind farms, and then they aggregate multiple offshore farms around an island, and then use one huge underground cable to transmit this power to the mainland. So indeed, Turkana being rich in wind, there is that possibility of having it as an energy kind of island that supplies the rest of the country, because it's one of the best wind areas around the world, and it's not actually up to its potential. So it is a dream that is very valid, and we can support it as much as is feasible. Thanks.
Thank you all for today's session. I think we've had a very, very interesting and engaging session. We've actually never had this kind of a session where I get to keep quiet and just take the questions from the audience. So thank you also to the audience. Thank you to the lady and gentlemen who have stood in front of the firing squad of questions and very bravely answered some of the questions, or actually all of the questions. So now I would really just give each of you maybe 1 or 2 minutes to just give a concluding statement. Then we shall close this session for today. So starting in the order that appears in my screen, Brian first, then Ray, then Munoru, then Kaluki, then finally Faru. Brian, go ahead.
So first, I'd like to say thank you to ASAC for hosting this session. Of course, this regulation has been waited for with quite a lot of trepidation. And having been through this process with Raymond and Munoru, we know the fights that we've had in developing this regulation. And the one thing that I'll say is that markets are living things. So the regulation is the way that it is now. I know that there will be future versions of it. There'll be a lot of regulatory and legal review. So yes, as Raymond correctly said, please go read the regulation. Opportunity is there for all stakeholders, including the utility. And yeah, we will continue endeavoring to bring the best possible quality of supply.
Thank you, and also really appreciating also taking your time to attend, especially on behalf of Kenya Power. We're grateful for that. Raymond?
Thank you so much. So first and foremost to you, George, and the entire ESAC team for putting together this knowledge sharing session, including Penina. Secondly, of course, to my fellow panelists, Brian, Dennis, my colleagues, and as well as Edwin and Kaluki, for making time for us to deliberate and, of course, share opinions and look at how we can restructure our market based on this new regulatory framework. Mine basically is just to say that this particular new regulatory framework is basically in line with the various electricity reforms that we've been undertaking over the years. And of course, the objective remains the same, sustainable, reliable, quality and affordable supply of electricity, and rather not just electricity, but even electrical services within the supply chain. So this presents an opportunity. Gazetting it and publishing it is but just step one. So now that we're moving into the implementation, as a regulator, we're definitely looking forward to working with our various stakeholders in ensuring that the transition not only is smooth, but it's very feasible and technical, and definitely merits everyone along the supply chain. It calls, I think one of the biggest feedback I've received from this session is definitely on the issues of opportunities and challenge, which calls for further sensitization. So I'll definitely take that up and probably take it up to my management that indeed now we need to have a post-gazettement sensitization on this regulation to the various stakeholder groups, just to provide them with an awareness of what now lies ahead in terms of even structuring our entire electricity supply chain. Over and above that, I think I wish everyone a good evening and a good night. And Mkwe Salama, stay away from Ebola or whatever is bringing Ebola to this country. Thank you so much, George, and everyone on the call.
Thank you, Raymond, for the regulated comments from the regulator. Now, go to, we've called you so many names today, Dennis, Kobia. No. It's your turn to give us your concluding comments.
Thanks, George. Thanks, ESAC. I'll also start by appreciating your efforts and also recognizing the capable panel that you managed to constitute. I also learned as much as I could contribute, and it's really an honor to be part of this. I'll also appreciate the audience who have taken the time to participate and to maybe listen into sometimes very technical lingo, and it's not for granted. We are all here to probably grow the energy sector, and your time is really appreciated. I'd also like to mention as a closing statement that for me, these regulations are a huge game changer in how the system is operated and planned, and it will introduce so many actors. So there are so many opportunities to be taken up there will be a lot of digitalization that will assist these regulations be properly implemented. The issue of artificial intelligence will probably come here even as we try to do the analytics and to understand the system at a faster pace. There will be a lot of new equipment coming in probably, and I think the investment and the opportunities, human opportunities, is huge, and it's there for the taking. Thank you.
Thank you so much. Kaluki?
Thank you. And just as my fellow panelists have said, big congratulations to ESSAC for such a noble initiative of desensitization, and actually to the regulator for making the bold step. I think this needed to happen. I have learned a lot as well during this panel. And for me, I'd say that now that it's already gazetted, we should all ensure that as we solve the few technicalities that are being pointed out, we should make sure that we also make deliberate effort to sensitize more on the positive sides that are already there, so that we make it attractive for all the players, so that at least the implementation is smoother. And just as a concluding remark, I think I would not say everything has changed, but the regulation provides an opportunity where a developer is able to sit down with a consumer and sign an agreement so long as they have met the preliminary requirements of getting their specific licenses without requiring anyone's letter of support or anyone's permission, so long as they have met their license. So that changes a lot in terms of timelines of delivery of our projects, and consumers getting power that is reliable, competitive. So that really opens a huge opportunity for our market, and that's quite a big step to the future. And I'm really, really looking forward to being part of the participants of this regulation. So thank you very much to EPRA and ESSAC, and of course, all the other players that are there, because it was time for the different participants in the Ministry of Energy to take their specific positions. So as probably KPLC is now sharing the blame, the system operator should be ready to ensure that they're able to absorb the shock, just in case the implementation is smooth. So thank you very much. Have a great evening, and looking forward to more learning sessions. Thank you.
Thank you, Kaluki. And now we shift to last but not least, Faro.
Thank you very much. I had prepared a short speech, so I'm just joking. I think
I hope it includes a legal disclaimer.
No.
To cover all of us.
I just wanted to say that this framework has been long awaited, so it's a great thing that it's here. We are moving towards a competitive electricity market. We are enabling back supply arrangements. We are giving effect to the open access principles that were there under the Energy Act. It's an amazing opportunity, and maybe not a lot has changed, but it has the potential to change the entire system. There are so many opportunities, even for KPLC, for KETRACO, for developers, for financiers, for customers. I'm seeing everyone winning from these regulations. Actually, they are a net win for everyone. What we want to see in the next 12 to 18 months is the same level of enthusiasm from the regulator, from KPLC and from KETRACO to make sure that these regulations are implemented, and that they are implemented smoothly, and engage as you have during their development with the private sector. See where the pain points are, be brave, take positions, move fast, and as I said, they'll make the entire system, the entire market very vibrant and good for all of us. Thank you, ESSAC, for having me.
Thank you all. And also on behalf of the Association course, we also really must acknowledge and appreciate all the work that EPRA has been putting in over the years, and also on this regulation, and I know on many, many others. So, asante sana to the regulator for these regulations. I think a lot of our members had been asking on when we would actually see the gazettement, and even now when we would see like operationalization of the regulations. So we look forward to collaborating with the regulator, with KETRACO, with KPLC, with all the advisory teams, like Bowman's, for instance, the financial participants that are maybe not today on this call, but we are really looking forward to seeing what sort of opportunities can then be unleashed for the private sector in the market. To everyone who has attended and stayed tuned to this late hour, we really appreciate that. This recording will be available on LinkedIn. It's a permanent link that will be on LinkedIn, on our LinkedIn page. We will, as said, also share the presentation that was done by Raymond earlier in the session. And we look forward to the next discussion, the next KSS that we will hold on a topic that maybe is relevant to you. So if you have a specific topic, and maybe perhaps there is a need to do a second session, a specific part of these regulations, please feel free to also comment and tell us about that, and we will consider hosting another KSS on the same. But for today, thank you very much. Have a good evening, and we'll see each other in the next knowledge sharing series. Asanteni sana.
Thank you very much.